Have you ever noticed that in almost every other area of life, the harder you work, the more you earn? If you're a carpenter, sawing more wood means more furniture. If you're a coder, writing more lines of code usually means more progress. We are literally hardwired from birth to believe that doing something is the only path to success. But then, you enter the world of trading, and this instinct becomes your greatest enemy. I remember my first year clearly. I would wake up at 6 a.m., sit in front of 3 different monitors, and stare at the 1-minute chart until my eyes burned. I felt like a professional. I was drawing lines, checking news feeds, and clicking buy or sell every time a candle twitched. I was taking 50, 60, sometimes 80 trades a week. I was exhausted, stressed, and most importantly, I was losing money. I thought I was working hard. In reality, I was just a busy loser. The market doesn't pay you for your effort. It doesn't care how many hours you sat in your chair or how many indicators you have on your screen. In fact, the market actually punishes effort. It preys on the person who feels the need to be active. This is what psychologists call action bias, our natural tendency to favor action over inaction, even when there's no evidence that acting will lead to a better result. In trading, doing something is often just a sophisticated way of gambling. We take maybe trades because we're bored. We enter a position because we've been sitting there for 3 hours and feel like we need to justify our time. I didn't start making real money, life-changing, $10,000 a month money, until I learned to embrace the one thing every beginner is terrified of: boredom. I had to learn that sitting on my hands and watching a perfect setup pass by because it didn't quite hit my criteria was actually a win. Think about the difference between a gambler and a predator. A gambler goes to the casino because they want the rush. They want the lights, the sounds, and the action. They are there for the experience. A predator, like a crocodile or a leopard, doesn't want an experience. They want to kill. A crocodile can sit perfectly still for days at a time. It doesn't move when the birds land nearby. It doesn't move when small fish swim past its nose. It doesn't get bored and decide to go for a swim just to stay active. It stays completely motionless because it knows exactly what its meal looks like. It is waiting for the one specific moment when a zebra or a wildebeest makes a fatal mistake at the water's edge. That wait isn't wasted time. It is the strategy itself. When you sit at your charts, you need to stop viewing yourself as an employee who needs to clock in and produce trades. You need to start viewing yourself as that predator. Your prey is a very specific market condition. Maybe it's a sweep of a previous day's high followed by a shift in market structure, or maybe it's a pullback into a 4-hour order block. Whatever your strategy is, it probably only happens a few times a week. So why are you clicking buttons 20 times a day? The $10,000 I made wasn't because I found a secret indicator or a holy grail algorithm. It was because I stopped chasing the small fish. I realized that the middle of the move is where retail traders go to die. They see a green candle and they get FOMO. They think, I have to do something, I'm missing out. So they jump in. Then the market reverses, hits their stop loss, and they get angry. Then they revenge trade to get that money back, and now they're in a spiral. By the time the actual high probability setup arrives, the big wildebeest at the water's edge, the retail trader is mentally exhausted. They've lost their capital, they've lost their confidence, and they're too scared to take the trade that actually matters. Boredom is your protection. It keeps your capital safe and your mind sharp for the only trades that have a statistical right to be in your portfolio. If you aren't bored while you're trading, you're probably gambling. Let's look at the actual math that took me from a break-even trader to a 5-figure month. Most people look at a $10,000 profit and imagine a screen filled with hundreds of winning trades. They think you need to be right every single day. The reality is much more boring than that. In that specific month, I only took 8 trades. That's it. In 4 weeks of the market being open, I only clicked confirm 8 times. Out of those 8 trades, I lost 3. But because I wasn't exhausted from overtrading or revenge trading, I was able to hold my winners. My average risk to reward was 1 to 3. This means that for every dollar I risked, I was making 3. Because I waited for the most obvious, boring setups on the higher time frames, my winners were clean. They didn't hit my stop loss by a fraction of a pip because I wasn't playing in the noise of the 1-minute chart. Compare that to my old self. If I had taken 50 trades that month, even with a decent strategy, my transaction costs alone, the spreads and the commissions, would have eaten 20% of my capital. Then add in the mental tax. Every time you take a trade, you use up a piece of your decision-making brain. By the time trade number 45 comes around, you are making mistakes. You're moving your stop loss. You're taking profits too early because you're scared of losing what little you have left, and you're entering late because of FOMO. The math is simple. Fewer trades equals lower costs, higher mental clarity, and bigger positions. When you only trade once or twice a week, you can afford to risk more on those specific trades because your conviction is higher. I wasn't betting $100 on a coin flip. I was betting $2,000 on a mathematical certainty that the market was overextended. When you do nothing for 4 days, and then the market finally hits your zone, you don't hesitate. You execute. That $10,000 was the result of 95% waiting and 5% execution. If you want to make the big money, you have to stop trying to make some money every hour. You have to be okay with a $0 Tuesday, a $0 Wednesday, and a $0 Thursday, just so you can have a 5-figure Friday. So how do you actually do it? How do you sit in front of a screen filled with flashing numbers and nothing for 8 hours? You don't. You need a system that forces boredom upon you, because your willpower is not enough to fight the dopamine hits of a moving chart. The first rule is what I call the alert-only policy. If you are staring at a chart that is in the middle of a range, you are looking for trouble. You are practically begging your brain to hallucinate a pattern that isn't there. Instead, you identify your points of interest, your supply zones or your liquidity levels, and you set an alert. Then you close the laptop. You leave the room. You only return to the screen when your phone goes off. If the alert doesn't hit, you don't trade. Period. This one change alone will cut out 80% of your losing trades. The second rule is the higher time frame filter. If you're feeling the itch to trade, look at the 1-minute chart. It's chaotic, fast, and exciting. Now, switch to the daily or the 4-hour chart. Usually, that huge move you thought you were seeing on the 1-minute is just a tiny, insignificant wick on the daily. By anchoring your perspective to the higher time frames, you realize that the market moves much slower than your emotions do. It forces you to realize that the big money moves take days to develop, not minutes. The third rule is the 2-trade maximum. This is your circuit breaker. You decide before the market opens that you will only take 2 trades today. It doesn't matter if they are winners or losses. Once you've clicked that button twice, your day is over. What this does is it makes you incredibly picky. When you only have 2 bullets in your gun, you don't go around shooting at every shadow. You wait for the target to be standing right in front of you. You become a specialist in saying no. By implementing these rules, you aren't just waiting. You are managing your mental capital. You are ensuring that when the real opportunity arrives, you aren't already frustrated from 3 small losses. You are calm, you are focused, and you are ready to execute with size. The greatest irony of professional trading is that the better you get at it, the less time you actually spend doing it. When you first start, you imagine the trader lifestyle is all about fast-paced charts, flashing red and green lights, and the constant rush of the market. But the reality for those of us making 5 figures a month is much different. Most of my day is spent reading, working out, or simply being away from my desk. If you saw me on a Tuesday afternoon, you wouldn't think I was a trader. You'd think I was unemployed. And that is exactly the point. When you embrace boredom, you stop being a slave to the price action. You realize that your value isn't in your activity, but in your judgment. If I can make $10,000 in a month by making just 5 correct judgments and 3 incorrect ones, why would I ever want to make 100? This shift in mindset changes your entire life outside of the charts. You stop being the stressed out person checking their phone at dinner. You stop being the person whose mood is dictated by a 5-minute candle. You become someone who is in control. You realize that the market is just a tool to buy back your time, not something that should consume it. If you're watching this and you're currently in that cycle of overtrading, if you feel that physical itch to enter a position just because you've been waiting for an hour, I want you to try something. For the next week, I want you to aim for 0. Try to have as many 0 trade days as possible. Only take the trades that are so obvious, so boring that it feels like stealing. You'll find that your account balance starts to grow, not because you found a new strategy, but because you stop giving your money back to the market in the gaps between the real moves. Trading is the only profession where you can get paid more for doing less. It took me 3 years to learn that. I'm hoping it takes you only 10 minutes. If this video helped you realize why you've been struggling, hit the like button. It tells the algorithm that traders want more truth and less hype. And if you're ready to join the Smart Trader Club, comment patience down below. I'll see you in the next one.